If you earn more than £50,000, you need to consider some tax planning to reduce your tax bill. In this scenario, we have Tom, who earns a total of £55,270. His first £12,570 is tax-free. The next £37,700 is taxed at the basic rate of 20%, and the remaining £5,000 is taxed at the high rate tax of 40%. His total tax bill is therefore £9,540. Although if Tom put £5,000 gross into a pension, which means he only needs to put £4,000 net contribution, and the pension will claim back the tax that he's paid to earn that £4,000, he will reduce his tax bill by £1,000 to £8,540, and here's how it works. He'll continue getting the first £12,570 tax-free. His basic rate band will be extended by the amount that he puts into his pension, and that's the gross pension contributions. This means that instead of having £37,700 at basic rate band, he has £42,700 at basic rate band, and therefore he has eliminated his high rate tax. In this next scenario, Ben earns a total of £110,000. For every £2 that he earns above £100,000, he loses £1 of his personal allowance. So Ben starts off with £12,570 being tax-free. Then he pays 20% basic rate tax on the next £37,700 and 40% high rate tax on the remaining £59,730. So because he has earned £10,000 above the £100,000 threshold, he loses £5,000 of his personal allowance, which then gets taxed at 40%. This results in an extra £2,000 of tax. This is what is commonly known as the 60% tax bracket, because Ben has already paid 40% tax on that £10,000, and he now has to pay another £2,000 tax on the same £10,000, meaning a total of 60% tax on that £10,000 between £100,000 and £110,000. Ben's total tax bill is therefore £33,432. I'll just let that sink in a moment. If Ben was to put £10,000 gross into his pension, this would mean putting £8,000 net, and the pension will then claim £2,000 back from HMRC. This will extend his basic rate band, but also give him back the personal allowance that was removed from him. Here's how it works. The first £12,570 will be tax-free. The next £47,700 will be taxed at basic rate tax of 20%. This has been increased from the £37,700 as a result of his pension contributions. And then the final £49,730 taxed at 40%. And therefore Ben's total tax bill is £29,432. This gives Ben a tax saving of £4,000. If we add on the £2,000 basic rate tax back, it means the net cost of his pension is actually only £6,000. Thanks for watching.